All right, welcome back to another episode of Asset Coach and Tax Strategist. Thanks so much for being a subscriber. If you haven't subscribed, hit the subscribe button, give us a thumbs up, add some comments down in the comment section. We'll love it. This content is really for you and specifically to help you understand some of the basics of our economic life, right? Our financial life. Now, this episode is a continuation of last week's episode where we were talking about the wealthy taxpayers of 2022, right? What those documents, what did the tax brackets look like based on 2022 taxes? So one of the things I wanted to do is give you an idea of how we broke that down last time. But now, what's it look like today? We talked about inflation, right? We talked about economic termites being taxes, inflation, time, laws, and regulations. So what does that change do year over year? What's the government do? What's the brilliant aspect of what they do in these brackets, these progressive tax brackets? So remember, the first dollar's at 10%, and then when you make enough in that bracket, you go to 12, so on and so forth, right? 10, 12, 22, 24, 32, 35, 37, right? And then 37 is the top. Okay. Now, what we need to understand is this inflation, this cost of living. The government does put a cost of living in our income ranges on these brackets. So I want to show you the 2022 that we discussed last week, and then let's look at the 2025 this week. Okay, so I will share my screen so you can see the numbers. The bracket percentages stayed the same. Okay, they really haven't changed, which is good. And again, it kind of goes back to my comment last week. Is kind of the sweet spot. Government kind of gets an idea of what they want that taxes to look like. So let me go ahead and share my screen here, and let's dive right on in. Get my little video. Boom. All right. So off to the left here, we have the 2022 tax brackets. These are the brackets that we discussed last week. And when I'm going through married filing joint, single filers are different, right? The numbers are different. The bracket percentages are the same, but the income numbers are different. Okay. They're not exactly half, but they're initially they start off pretty close. But look at the 10%. So 10% still 12, 12, 22, 24, 32, 35, 37. So the percentages stayed the same. What changed? Well, the income. So if we were to look at the amount of change from year to year, what's this look like? Not a big change, is there? So you can make an extra $3,300. Do you think over the last 3 years, inflation was greater than that? Yeah. Yeah. Because this is what drives us to have to go work harder, work more jobs, change jobs, make more money, work harder, get more commissions, do more cases if I'm a doctor, do more surgeries, right? Whatever the case, see more patients, whatever the case may be. Inflation drives us to have to do more to pay for our cost of living, which causes our taxes to go up. Okay? So if you look in the 12% bracket, that income range jumped by 13,000, 28,000, 54,000. 69,000. By the way, this is kind of their sweet spot. This is middle America right there. Now, middle America can barely survive in some of the big cities in this area. Just the reality. Just the reality. Dual income. So that's one of the things that drove inflation up was now we have two household incomes. Right? So people are making more. So houses became more expensive. Cars, right now, a household needs two cars instead of one car, right? There's a lot of changes that we did in this two income household that all of this followed suit. So those households where it's still a one income household, there's a lot greater burden on that individual to be able to, but you see that when all of a sudden you have multiple children, it makes more sense for one of the spouses to stay home and have a one income because you find that the second income ends up paying for all the services to care for the kids, right? So when you get to that number, so usually it's right around 3 kids, it becomes much more important, depending on your income, of course, for one of the spouses to stay home. Now, what some two income households will do is they'll end up taking that second income instead of sending the kids to daycare. They end up bringing in an in-house nanny or au pair to help. There's a cost associated with that, but the kids are home. They're not around all the other kids, right? All of their activities are still taken care of, right? All the things, they still have that nurturing family feel, so to speak. I don't know which one's better than the other. I know what my family did and our decisions that we did, but every family dynamic is different. Okay. You'll take your religion into consideration in this process, your community, your family, right? Where you live, your income, economic situation, right? All of those things are factor on that decision of what to do. But I'm not saying that trying to decide on helping you figure out how to raise your kids. My point in all this is that when we look at the income increases, this is a 3-year. The cost of living increased probably more than this did, right? But the 35% jumped by 103. That's good. That means those that were making 650 now are still in the 35% tax bracket. They're not in a 37% tax bracket. Right? So they can make another $100,000 and not jump tax brackets. Okay? That's good. That's good. But the reason why the government does this is so we ignore this. So we ignore the bottom line of taxes. So they can make more money in tax revenue. But here's the thing. They don't make all their money on income tax revenue from this. We have other taxes, right? So there's other areas that we pay taxes on. And so this is why the tax code is written for business owners. As a business owner, you really have the ability to utilize what we call the 3Ds. Go watch the previous episodes in this channel when we talk about economic termites and the 3Ds. Go buy my book. We talk about through the 3Ds in both of my books, the economic termites and farming assets. The 3Ds represent the most tax efficient assets. And how do I know they're the most tax efficient assets? Because that's what the government gives most tax efficient benefits to. Why? Because that's where they want your money. And that's what creates more revenue for them. It's a carrot deal. So then you have to be very diligent in managing those 3 assets. So the first D is deductions. So your business can provide deductions. The second D is depreciation. It's an expense the government gives on physical property. So if you have real estate, equipment, or even investing in oil and gas, you get depreciation. That expense of that physical property gets older each year, it depreciates. So they treat it as an expense to encourage you to improve, buy, right? Now there's something called depletion, which is like depreciation, but it's for natural resources. So if you forestry, minerals, animals, that kind of stuff. Excuse me. So that's the second D is depreciate. And the third D is distribution. The whole reason why we have assets is to create distributions. Now, when we hear distributions, we think income. But income is taxable. What we want is cash flow because cash flow is plannable. So these distributions, we want tax efficient cash flow. We want them to create cash flow so we can redirect the cash flow planet. Then we may have taxable income. Okay? There's a right way for the formula to get the right answer. Okay, so I just wanted to share just a quick little brief continuation of last week, this week, of looking at and talking about inflation and how that affects our taxes. And our taxes being increased, a cost of living adjustments, increasing and changing those incomes. So that's cool by the government because they don't have to do that. But they do that, it's self-serving. So we feel like that they're, okay, good, that the incomes went up. Okay, great. The income's in the brackets. Well, okay, we don't jump to another bracket. All right. But you're still paying taxes. So my comments last week still run true this week. Learn about this. Educate yourself about this. It's your largest household expense. You need to understand it. You need to understand it. Thanks so much for being a subscriber. If you are, if you're not a subscriber, man, hit that subscribe button. We drop episodes every Thursday. Love your thumbs ups. Give us some comments and go make it a great day.